Good morning, everyone, and welcome to the European crossover webinar. We are seeing some dollar strength here. I did want to go and point out, I was going to point out in the chat room, but the webinar is starting. We are moving right in here, the euro into the 38%, coming here at 11.65. We've had this level here at 11.60, but this is what we're going to have for our bias chart support is 11.52. I think we may have had that since. Oh, okay. Wrong screen on that. No, we had 1160 in the last Friday's bias chart. I'm hoping the audio sounds good. I have a new computer, got things set up, so I'm hoping it's picking up the audio. I'm sure I'll hear something from the chat room if it's not. But we're seeing this pullback here. Looked like the euro was capable of just about breaking out, but dollar's going to make one little run up in here. We'll see if we can come up and push a little bit higher. We know that 97.89 is that key area here. So we're seeing the euro pair back a bit here. And let's see, Peso is kind of making a little bit of a run here, just a little bit higher also in the Peso. And dollar yen still hugging near these lows. Really having a very tough time trying to get any type of a move going here. We'll take a look at the Aussie. Just rolling back a little bit here, and let's take a quick look. I'm trying to get used to this computer. Hang on one moment. I hope I can get that squared away right. Let's take a look here. Okay, here we are on the cross rates. And we're seeing gold also dip here. Now we're into second week in August, definitely into European holiday trading. Generally, a lot of many Europeans, I should say, take the last 3 weeks of August off. So we're seeing very, very tight ranges. Seeing the euro yen also push even lower here, and we already know about the guppy issues down, 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 down. But we'll get into those as we go through the bias chart. So let's go into the main screen again. With me. Okay, here we go. It'll take me a little bit of time to get used to it. So let's just go over the news real quickly, or rather quickly, I should say. On the morning bid, Renzi roadblocked Italian snap. Matteo Salvini's push for early elections in Italy has hit a potential roadblock in the shape of Matteo Renzi, the ex-premier and former leader of the Democratic Party, who still wields strong influence over his center-left party, said on Sunday that going back to the polls just when the government is due to prepare the 2020 budget would be crazy. Instead, or as they say in Italian, basta. Well, no, basta is enough. Okay. But anyway, instead he proposed a cross-party caretaker government to sort out some of the more pressing budget issues, like avoiding a hefty new sales tax before the country heads back to the polls. I don't want to spend too much time on the politics. Announcement by Boris Johnson's government of plans to create thousands of more prison places and extend the stop and search powers of police have fueled speculation that he's gearing for a general election. Given the law and order focus of many traditional conservative voters, Johnson is also launching a review of sentencing of the most dangerous and prolific offenders and will today host a roundtable with meeting with officials from police, probation, and prison sectors separately. Okay, once again, I don't want to spend too much time on politics. Sterling fell to within a whisker of 120 overnight for the first time since January 2017, and an otherwise mixed calmer start to the week for the world markets. The pound, which is now down more than 5% against the dollar in just 6 weeks, slipped as low as 120.15 in Asia, where Japan, Singapore, and India were closed for holidays. Sterling also fell to its lowest against the euro since October 2016. Beyond mounting anxiety about no-deal Brexit, there was no one trigger for the overnight move, and it was more of a continuation of last week's slide on news of a contraction of the UK economy in the second quarter. Much of the weekend and Monday reports centered on whether the opposition Labour Party would propose a vote of no confidence in the government of new PM Boris Johnson. Now, I did see there was a report here that there were some lawmakers trying to put together some a potential for a yes, it says British pound stabilizes snapping third decline amid reports that some UK lawmakers were drawing up plans to force PM Johnson to seek an extension to the October 31st Brexit deadline. So that kind of gave the cable a little bit of relief. Um, Moving on, elsewhere, Shanghai stocks rallied about 1% after local margin trading restrictions were lifted, and traders identified some stability in the yuan despite another weak fixing of the currency's target midpoint by the PBOC. Wall Street futures were higher after Friday's late sell-off, and European futures were up almost 1% before the open. Italy's bond market was on firmer ground this morning, perhaps reflecting some relief among investors that Fitch on Friday left the country's ratings unchanged, albeit with a negative outlook. Politics remains in focus after the League filed a no-confidence motion to bring down the government. A timetable may be set on Monday. The dollar index was higher, with the yen outperforming. And let's take a look. Euro continues to drift lower right into this 38%. So let's get this out of the way. And the yen shines as hedge funds flee from short bets. The yen gained on Monday, rising to its highest against the dollar in nearly a year and a half, as hedge funds bought the Japanese currencies on concerns that a prolonged China-US trade war could tip the global economy into a recession. Against the dollar, the yen climbed a quarter of a percentage point to 105.32, closing on its highest against the U.S. currency since March 2018. Risk indicators in global markets have become more shaky, and the yen is reflecting those concerns, and safe haven shelters like the yen and the Swiss franc should continue to benefit, said Commerce Bank strategist Esther Reichelt. Goldman Sachs cut its forecast for U.S. economic growth, a warning at the weekend that a trade deal is unlikely before the 2020 presidential election. The yen is a top performer among its biggest rivals in global foreign exchange, rising 3% this month. As a result, hedge funds that usually borrow in yen to finance leveraged bets in other asset classes have been forced into rapidly unwinding of short positions on the yen, send the Japanese currency higher. All eyes will be on the Chinese figures on July retail sales and industrial output due on Wednesday to gauge the impact of domestic activity from the long-running trade conflict with the U.S. So that's going to be something that will be interesting. Let's see. Also, Jackson Hole is going to be later in the week, but this one will be key, when they focus on July retail sales, industrial output for China. And we already talked about the yen being buoyed. Let's see here, the pound two-year trough after the data showed the UK economy unexpectedly contracted in the second quarter. The Telegraph reported Labour's MP had been told to cancel all travel in early September in anticipation of Jeremy Corbyn tabling a motion of no confidence in the government. And let's go move on. Japan's love of foreign insurance, a yen headwind set to wane. So just a little bit more touch on the yen. Japan's craze for overseas insurance products, driven by a need for better yield than the near zero ones at home, has been a long-standing headwind for the yen as domestic insurers bought foreign bonds. But demand is likely to cool as authorities clamp down on aggressive marketing for those foreign currency-denominated insurance products, which will curb their sales and hence the selling of yen. That's bad news for Japanese policymakers who are concerned that the stronger yen hurts export competitiveness. Industry sources say a surge in demand for foreign currency denominated life and pension insurance since Japan's move to negative interest rates 3 years ago has seen at least $4 trillion of such products being issued. That's $37 billion. Japan's life insurance, big players in the global financial markets, thus hold foreign currency bonds as a hedge against the currency risk stemming from these products. For instance, Teiju Life Insurance, the country's largest private life insurer, has been increasing holdings of foreign bonds at 350 billion yen a year in recent years. Such flows can exert downward pressure on the yen because by far the majority of the foreign bonds invested by investors are currency hedged, thus having a neutral effect on the Japanese currency. Together with foreign asset buying by government pension funds, they are helping to curb the yen's strength, said Yoshinobu Shigemi, But with the products are coming under more intense scrutiny due to a rise in complaints, and many analysts think yen selling stemming from these products will likely slow. That would be a headache for policymakers as yen, considered a safe haven currency and hovering at a 7-month highs versus dollar, is likely to stay resilient with the trade war unresolved amid growing uncertainty and the bone of the global economy. Life insurance associations have the number of complaints from customers who bought such products has doubled in 3 years. The biggest complaint was that sales staff at banks did not fully explain the risk, including the possibility investors will not get back what they paid for if the yen strengthens sharply. We have been checking within flyers insurance handout to investors properly explain the risk. A lot of a lot of consumers have the impression that insurance is safe when they are in fact taking financial risk. Really, the story here is that in the long run, this could result in the yen continuing to further strengthen. So that's really what you want to take away from this. Although it's still a little ways off, that would what you want to be the concern with. Let's go and move into the bias chart. And let's go move into the euro. The euro has not been able to get past 1208 on a closing basis. European data remains weak, with Germany leading the charge lower. Bunds remain a ball and chain for the euro. Support is 1153. A daily close above 1208 will allow an eventual test of 1285. So that's what we're going to have our bias chart support today. It's actually going to be at 1152. So let's go and mark this here. I don't know why this thing is here. Don't like stuff cluttering. There we go. And on the upside, let's go and take a look here on the 2-hour chart. We know where the bigger resistance is, but for right now, if we were to start to see things turn around quickly, for today it'd be 1211. We'll have to do that later. Once again, it's a new computer, so I've been setting things up. So I don't want to mess around. Initially, when I tried to bring on the bias chart, I didn't want to load up because it was coming off of an old Excel, I guess, or something. But I remember doing that on my other computer. So I'll try and save this a little bit later. Let's go and move into the cable. But I do like this computer. It's very responsive, very quick, very fluid. Oh, I've gone it. Cable appears hell-bent on taking out 120. Economic data continues to worsen with Brexit-related concerns. Initial support is 1989 with 1906 on the horizon as as a challenge, a low price. So you can see down here, potentially we can still get to 1906. But today's bias chart support is going to be 1989. Now, we are seeing a little bit of a rally here. As I mentioned, there's some talk that reports that UK lawmakers were drawing up plans to force PM Johnson to seek an extension to the October 31st deadline. And we're so close to 120, I guess you're seeing a little bit of value buying come in. We'll take a look here on the 2-hour chart. But we could maybe easily start to see this thing slide back again. So just to be on the safe side, I mean, right now, if you're looking here at support, it'd be right there, 2029. What's going up? Where's this up here? It's quiet trading, but this could easily, lose its, and we could end up sliding back down. So I'm going to go with this 1989. And on the upside, give me 2094. Let's go move into the Aussie. I've got my clock set right, but I don't know why this is showing different, but I think I'm going to just reload this because on one of the other chart pages, it's actually showing the correct time. But anyway, that being said, so onto the Aussie. The Aussie found support just ahead of the level 66.70, and you can see that level at the bottom. Responding with a hammer, Aussie is adjusting to the outlook for further lower rates from the RBA. Initial support is 67.52. A daily close above 68.31 will allow a test of 69.05. So we're going to go with that. So 67.52 for the support. And on the upside, let's take a look. It's going to be 68.14. You're kind of holding on this 38% here. Let's move into the Kiwi. Kiwi found some short covered off major support level 63.89. After falling or sliding 400 pips, a daily close above 69.43 will allow some breathing room. Rallies to 65.97 will find willing new shorts with initial entry at 65.52. Minor support is at 64.36, and you can see right there the 64.36. We're going to place that as our bias chart support today, and you can see the 63.89 goes way back. You see that here? So we just take, that's where the market found some support there. So it's going to be 64.36 for the bias chart. On the upside, let's go and move into the 2-hour chart. It's actually going to be right there, 64.97. This market's really having a tough time. I'm going to go right here, 65.11. 65.11. That's a long ways off. It'd be pretty hard for this thing because it's so weak. I think we have to be realistic, and it's going to be 64.97. Let's go move into the dollar CAD. Okay, I think that's the old so let's go move this on. Dollar CAD took a step back after a strong run when crude oil recovered from an $8 fall. Key support is 3,200 or 32 cents has held. The pair remains susceptible to a move to 31.77. The pair needs a daily close above 32.65 to jumpstart the upside. So we're going to go with 32.65 as our bias chart resistance. And 31.77 on the downside. So we held that area very well right in here, just 32 cents. And we're bouncing off of that with the dollar strength, but the potential for us to move lower. Crude oil is slipping a little bit right now. So we'll see how that holds up. With that, let's go on and move into the peso. Dang, this thing is really starting to open up. We do have, Blake mentioned that on the weekend video, that, there's a central bank meeting this week, and they're looking to go in and cut rates, and has a long way to go, and boy, could we slide back. Doggone, look at this thing. Look at that. Boy, what a run already. The dollar peso is pared back but remains in a solid buy mode after taking out major 1923.6 level. Support comes in 1935 with resistance at 1947. But we're blasted past that right now. So here's going to be our resistance level right here. Holy smokes. 1972.8 right now. I thought about it. I wanted to get long ahead of, before when they have that meeting. But I was thinking like maybe late today or Tuesday. Holy smokes, man, this thing's already flying already off the table. Support, let's go and take a look on the 2-hour chart. Doggone. Look at that. I thought either late today or early tomorrow was going to be a good opportunity to get long this thing well ahead before it made that move. Doggone if it didn't already make the move. Support right now is going to be 1947, which was going to be resistance, but now support. Go moving to the dollar yen. Let's go and adjust this. It's actually right there. So it's 1968 too. And onto the dollar yen. God, look at this. It's still continuing to push lower. Look at that. But it had to do with the yuan. The dollar yen bounced off the buy support, chart support of 527, but the sell mode remains well intact. Rallies to 676 will find new willing shorts for a much lower move to 323. On a break to new lows, support comes in at the flash crash low of 464. That looks like the way they want to go to is 464. Now there's support here at 527, and really it's on this yuan. So they're just testing this area here. So what we're going to do is we're going to mark 527 and 464. On the upside, let's go into the 2-hour chart. Right there, 601. Golly, the thing's really slick. And we'll move into the cash dollar index. The dollar index broke lower late on Friday. At the close, unable to get past the day's buy chart resistance, which was 97.62. Initial support comes in at 96.82, followed by 96.50. Resistance remains at 97.62. Well, we're above this, so it's this key huge level that's been in place for a very, very long time, 97.89, and that will be our buy chart resistance. Move this out of the way. I mean, 97.89. Oh, we had that from Friday. And support. Well, we're still working. That's a little too low there. It's going to be 97.30. And with that, we'll go and move into the Kiwi. Yeah. There we go. The Kiwi yen found a pause after relentless selling of the last 2 weeks. The pair has the potential to move to 67.17. New shorts will come in full force at 69.45. Only a daily close above 70.50 will negate the downswing. So we're looking potentially for 67.17. Let's go on moving to the 2-hour chart. Support for right now is going to come in right there. Oh my God, we're almost there, which is 67.86. The yen's already, I mean, we just took that dip was on this Chinese yuan here. So let's go with that. We're going to go with the 67.86. Resistance, well, that's pretty clear right there. $68.29. And on to the euro yen. The euro yen is clinging to major support at 1830. Well, I meant to say minor support, apologize. A brief short covering rally will find sellers at 1924 with a target of 1648. Well, we're challenging the 1770. Obviously, like I said, with the yen was strengthening, but I think this came up with this Chinese yuan little headline that just came up. So I'm going to go with this 1770. Now, actually, we're well below that. So let's move into a 2-hour chart. See if we can find something a little bit closer. Although I think we can get down to that 1770. Well, we're in pretty sad shape right now. We're just going to go off of these lows, which is 1768. Well, here's a low right now. Unless the yen, and I don't think the yen's going to break higher. I mean, i.e. the euro yen lower at this point. Let's just go right now where we're at, which is 17. Let's call it 1760. On the upside, it's going to be 118 even. 118. Going to the euro odd. After posting a shooting star, the euro odd pair found support at previous resistance, which was 64.11. So it found support there. You can clearly see that right here. After we had the shooting star, came back down. Resistance had been 64.11, which now became support. The pair remains in a strong buy mode, but late buyers will be happy to sell at 65.65 with the idea a challenge to a major level, 60.30.41 may be in the offing. Well, you can see here we've just about made that run. There's that 65.65. Actually, there's right there, 65.65, right there. And the high so far has been 65.47. So we'll stick with that 65.65, but may have a tough time trying to get back up there. Support, well, let's go and take a look here on the Euro-Odd. $64.42. And to the Euro Kiwi. The Euro Kiwi is paired back to major level 73.09. You can see that there. The upside remains open, but we'll need to secure a daily close above 73.78. You can see we made a foray up there, but now we're sliding back on this Euro weakness. To reassert momentum, initial support is 72.54. So we're going to go with that 72.54 on the downside. And you can see they started out pretty strong earlier in the day, and look, they fizzled out quite a bit. And remember, we had mentioned here they would need to get above 73.78 to reassert it, and we got up to what, 73.92, and now we're fizzling. So the resistance, once again, will stay here is at 73.78. And let's go and move into the Aussie. The ASEAN found minor support at 71.58. A further break to 69.47 remains in the cards. A pause may allow a short covering rally back to 72.73, where new shorts will emerge. The pair would need a daily close above 73.18 to see further upside. Well, we're just going lower here. I mean, look, and we even have a nice little hammer there. And look, we're just sliding right back down the tubes. Let's take a look at a 2-hour chart to see if we can see anything. And we do see some support in here. You can see that right there. Coming in right there, and we're going to have that for our support, which is 71.20. 71.20. We actually got as low as what? Actually 20 or 21. So let's go with 71.20. I think, like I said, I think the yen will be okay here. So 71.20. Resistance. You see it right there, 71.71. And let's go move into the guppy. The question is, where is the bottom? Major support comes in at 23.27, but ahead of that, we have a value level of 26.54. Well, it looks like we just went down there to 26.54. Resistance is followed by 27.90, and then 28.41. So that we just went down here and tested it. That's a good value level, that 26.54. We'll pull it back and I'll show you where it came up with that level. Right there, you see that? And I can see right there, 26.54. So that's where we found some support at. 26.54. That was not a bad bounce. Look at that. Sheesh. I think the low was 26. Looked like the low was 26.55. And I had 26.54. And we saw one heck of a bounce. And that's a good value level, that 26.54. Let's put this in here. That's a very good value area here. Hence, we've seen a pretty good smart rebound of 50 pips already. Let's look on the 2-hour chart. Yeah, look at that, 26.55 off by 1 pip. Boy, that was a good little rebound too. 27.63. We call it 27.64. And with that, let's go and move into the starting odd. Sterling on is quickly giving up its gains after posting a shooting star. You can certainly see it right there. 77.01 is the 78% of the recent rally with additional support at 76.70. So we can see here, we've already come up here to 78.23. Let's go and take a look at here on the intraday. So it's going to be 77.21. We're actually holding up very well here. We have to move this higher. So it's going to be 77.69. With resistance. Let's take a look at a fib. Past the 23%. Starting's pretty oversold. If we do get a bounce up here, it's going to be 78.88. 70, well, that's a long ways to go. Right there. 70, and it's still pretty high though. If they do get a little bit of a jump start, let's go right there. 78.82. Okay, here's the bias chart, and keep an eye on this euro. I like that 11.52 down there. See the dollar strengthen, but 97.89, it'd be a pretty tough road to hoe to get above that thing. So we're all set here. It's quiet. Last 2 weeks of August are generally pretty slow with many Europeans off on holiday. But we'll see where we go. And obviously, look at that peso. Zoom, zoom, zoom. Holy smokes. I mean, I was thinking about getting long late Monday today or early Tuesday ahead of this central bank meeting that Blake talked about. Boy, it's already made the move. All right. Well, thanks for joining us here on the European crossover webinar. And we'll see you later on the day and in the chat room.